audience, you're watching Joyrick Daily News and I'm Hannah, the news reporter for tonight. The benchmark nickel price on the London Metal Exchange has rallied over the past month after briefly falling below $16,000 per ton, as trading firms increased their buying to cover vast short positions. Options buying activities and commodity trading advisor bids have lifted the contract above $18,000 per ton in recent days. Higher Chinese nickel sulfate prices, delays to the issue of ore production licenses in Indonesia, and cuts to Class 2 nickel supply also supported the price rise. But the physical market outlook is mixed, despite the recent rise in prices. A sizable surplus of Class 1 nickel and weak downstream consumption are applying pressure on the downside, but possible further supply cuts in Indonesia, Australia, and New Caledonia are shoring up prices. A price gap between LME and Shanghai Futures Exchange contracts is providing arbitrage opportunities and keeping LME values in check. The LME official 3-month nickel price rose by 13.5% from $15,985.5 per ton to $18,445 per ton on March 13. Sustained buying to cover short positions was a major driver of the increase. Nickel short positions on the LME fell from 61,000 lots on 9 February to 22,000 on March 11th. MinRes has signed binding heads of agreement with Persisting Nickel Australia to acquire the Lake Johnson Nickel Concentrator plant and tender the Southern Goldfields region of Western Australia. This move forms part of MinRes' strategy to develop a lithium processing hub in the Southern Goldfields region to process lithium ores from its operations and third-party sources. The consideration of including a $1 million Australian dollar payment by MinRes upon execution of the binding heads of agreement, a $6.5 million Australian dollar upon completion of the sale and purchase agreement, and a further $7.5 million Australian dollar 12 months post-completion. Nickel miner PT Vale Indonesia is exploring a potential investment in a high-pressure acid leaching plant in Sulawesi Island, with an estimated cost of 30 trillion rupee, approximately $1.91 billion. Its investment ministry said on Monday. The plant, named as OAHPAL, will be the company's third such project to turn nickel ore into mixed hydroxide precipitate, a material used to make electric vehicle batteries. The plant could have an annual output capacity of 60,000 metric tons of nickel in MHP, the ministry said, adding Vale Indonesia is completing its final stage of exploration, and it will partner with automakers. Vale Indonesia already has 2 HPAL plants under construction in Sulawesi Island, in Pomala, and Sorowako. Both projects are in partnership with Zhejiang Huayou Cobalt, U.S. car maker Ford is involved in the $4.5 billion Polama plant, Indonesia. United States Steel Corp stock plunged for the 4th day after President Joe Biden said the company should retain American ownership, coming out against takeover by Japan's Nippon Steel Corp, despite the risk of upsetting a Kelly ally. The stock dropped as much as 11%, losing about a fifth of its value in the past 2 days, when the news broke that Biden would express concern about the deal. The shares are now trading at levels last seen before the Nippon deal was announced in December, suggesting investors are increasingly skeptical about its chances of success amid an ongoing federal review. Each March, China's National People's Congress, the country's top legislative body, holds its annual plenary session to determine the priorities for the current year and near horizon. At the same time, the Chinese People's Political Consultative Conference, the top policy advisory body, convenes its annual plenary session. Collectively, these two conferences are known as two sessions. The members of these two bodies have spent 1 week in the capital to get aligned on the important topics of new growth drivers, environmental protection, as well as low-carbon economy transition. The green transition would first take place through the optimization of industrial structure, energy mix, transportation, and rural-urban development. An integrated conservation strategy will be adopted to accelerate energy and water savings in key sectors. Green financing and circular economy policies will be adopted to establish green and low-carbon supply chains. To fulfill its carbon peaking and carbon neutrality target, China will enhance the capability for carbon calculation and verification, establish a carbon footprint management system, and expand the scope of the national emission trading scheme. A massive increase in the number of containers imported from China to Mexico may be a sign that businesses are avoiding the Trump-era tariffs on Chinese import, according to a new analysis by Norwegian research firm Sanita, the market analytics and benchmarking company for the logistics industry. They point to the strong growth in imports during 2023 and a very strong start to 2024, speculating it's probably the fastest growing trade of all the global routes. During the then administration of President Trump, the U.S. launched a trade war with China, imposing nearly $300 billion in tariffs on a wide range of products, which President Joe Biden has left in place. Sanita highlights the strength of the growth, which appears far beyond Mexico's domestic economy, noting that importing into Mexico's West Coast ports from China is seen as a viable alternative to goods arriving directly into the U.S. West Coast. Stainless steel scrap supply levels in Europe have remained tight for years, with strong international demand continuously depleting scrap stocks across all grades. Asian buyers, particularly in India and China, have been significant consumers of scrap. Even though the Red Sea crisis led to higher freight costs and longer lead times, the demand from Asia was still strong. Thank you for joining us tonight, and don't forget to subscribe for more videos like this.